In this podcast, we talk about what's going on with stocks and what's going on in the news, what the news is telling you, and then we dive into the charts and see what's actually going on. Fairly slow week, and I think that's going to be common because the election is going to occur. Right? It's happening on Tuesday, I believe, in the states. A lot of people wait. A lot of funds, they're not going to want to put on a big bet till they know what the next regime looks like, and then they try to figure it out from there, right? Now, spoiler alert, I'm doing all this data and all this math for some presentations about the election. It doesn't matter who wins in the long run. It's the market goes up the same on average, regardless of the party. But if you're trying to make individual bets and you think party A would be better for this sector and party B would be better for this sector, then it does make sense to wait and to hang out until after that's done and then make your bets accordingly. So if we go into this one right here, and we'll get started just by looking at the overall market, see what's happening this week, and still not a lot, right? We're up pretty big this week. We had a pretty bad day yesterday. We're up pretty big. We're still stuck inside this range. And I think this is just part of it. The market's going to be stuck in this range until the resolution of the election. Then we're going to get a move one way or the other, and we're just going to kind of see what is occurring after that. But get started. We're going to take a look at a couple things. So first, Amazon just absolutely blowing markets out of the water, doing very, very well on its earnings. It did great sales when it came to how it was selling for just different products out there. Everything that was its overall top line, bottom line, everything was doing fantastic. So with this talking a lot about non-farm payrolls, but earnings, again, you don't need to know too much about what happened because we're up on 6 times normal volume. We gapping up, and we're right back to this area right here, where this is where Jeff Bezos sold a bunch. He started to sell some shares. He wanted to buy a yacht. He's selling them at $200 a share. We're back up to that $200 a share. So what I think is going to occur, and the way that I would personally trade this, is it's looking to test this $200 per share, and it's looking to see, is Bezos back, right? Not only Bezos, is the people who were buying up here and got stuck, are they going to come back now that we're back up to that price and then sell this back off? Who knows? So when you get an overhead supply and something that was such strong supply before, when the market sells off and it comes back to that price, it only makes sense. It's going to take some time to explore that to see if it's going to push through, with what ferocity it's going to push through, all of that kind of thing. So it makes sense that we base around here for a long time. Personally, I really like this chart. It's one of the slowest ones when it came to breaking new all-time highs. It's a big part of the market out there. The consumer still looks very, very strong based off everything that we're seeing. And with that, people are going to buy things at Amazon. I mean, they do the cybersecurity thing, but they also obviously sell things and send stuff to your house, and people seem to be buying a lot of things. So it might be something to own. So I just want to see like a strong push or close above that $200 area, and I think I'll take a shot there. Worst case stop, you got to say, hey, if it gets back to this 180, gone. I'm talking a long-term trade because again, Amazon's just continuing to kill it. So it's definitely something I want to take a shot at some point. Next, we're going to talk about China. So China is releasing some rules about foreign investing. They're poking. They're poking still to try to increase what's going on in their economy. Right? If we go to FXI and then we go to this monthly chart, you can see that for many, many months, this is 2021, this is 2022 or 2020, or sorry, 2018. This is all the way back to 2015. So China's been just not a good place to put your money for years. We're talking almost 10 years of data on this chart, and it hasn't really been a good time to be buying China over that extended period of time. But they're trying, right? They're trying to pump up their market the best they can. They've done stimulus, they've done interest rate cuts. They're going, and now this seems to be part of it, where they're saying, okay, well, we're going to loosen up where you can invest and when you can invest, and all of this. So that creates potentially more money flowing, and that just lubrication of money is generally good for markets. You want to see as much money going around as you possibly can. So far, the price isn't really reflecting it. I'm very much watching this chart. It's very interesting to me. You got this insane rally up on this large cap index, almost doubling in just a number of weeks, pulling back about halfway, and now it's just consolidating, very, very tight, consolidating sideways, waiting for this to kind of push or move one way or the other. So what happens next? Who knows? But if we start to get some momentum to the upside again here, I think the whole world is watching this. This seems like one of those plays to get into the psychology of the market. This seems like one of those plays in which people are worried that they missed it. So if it starts to give a second chance, you may have just a whole bunch of people FOMOing in, and if you're one of the earlier ones to those FOMO type rallies, they can sometimes be fantastic. So just taking a look at this non-farm payroll, it showed unemployment actually ticking down and job growth near zero. So we're not getting more jobs, but people aren't getting more unemployed. Again, just kind of a do nothing number, but the market's really liking it. The fact that the more I believe the news that comes out, these reports, which I'm not one that I study closely, but the more they're on the straight and narrow, they're not up big, they're not down big, they're just kind of continuing on with what everyone expected. The more the market is pricing that in, is saying, okay, well, then now the Fed is also okay to cut rates, which is what they said they want to do. And if the Fed cuts rates, that's good for this market as a whole. 'Cause lower rates generally is a higher market. So if everything's remains chill, that's what we want to see, right? So this chart just shows all of this is COVID, right? This 2020, all this job creation that happened, that's just us coming out of COVID. And then ever since then, it's been kind of stagnant. It looked like unemployment was ticking up a little bit, and that started to get people worried. Now that it's just ticking down, remaining flat around 4%, I think that's just giving the market a little bit more ease. So when it gets this, and then it's going to get then the election is going to happen, and that will be fine. And I think that easing of, okay, we can return to a more normal market where we're not hyper focused on all these things. The Fed has told us what we're going to do. Unemployment is telling us what's going to happen. The election is done. We don't need to worry about it anymore. The more we go down there as well. So last thing I want to talk about is Roblox, of all things. They make video games. They make the ability for other people to make video games. This is a very interesting chart to me, and just they blew earnings just completely out of the water, right? I think that's actually the news thing. Um, Roblox rising like a phoenix after outstanding third quarter results, says Webbush. So massive base going back many, many, many years on this one, all the way back to like 2020. This is when the company started to exist way back here. And then it had a little spike and then fell historically, and then has done nothing ever since. But we have a little gap out of that base, a nice strong close, and maybe some continuation here as well. So that's just kind of the idea I'm gonna pose into next week. This Roblox, it's getting a lot of hype. The earnings were very, very good. So if this continues, then that might just be a pretty simple gap and continuation style play on a company that's just breaking out of this just extended base for an incredibly long period of time. All right, guys. So a bit of a shorter one this time, doing it solo, and there's not a lot going up in the news. I'm sure next week everything will be back to normal. We'll be talking about probably whatever happened in the election and all the news that happened after that, and how markets are reacting to that. So that will be a pretty interesting episode, and hopefully Steve will be feeling better and be back for that. So thank you all for tuning in. If you made this far, give it a like, give it a retweet, give it a subscribe. If you haven't tried Trade Ideas yet, link in the comment section below. We'll take you there. You can use Stats Edge for 15% off.